Hong Kong's stock market is roaring back. A record number of companies applied to list here in the first half of this year, with one estimate saying new listing volumes jumped 8 times to around $14 billion. That puts the city on track to become the world's largest listing destination this year. Mainland China traded companies have been looking for secondary listings in Hong Kong, such as battery maker Contemporary Amperex Technology. Already listed in Shenzhen, the company raised more than $5 billion in Hong Kong, the biggest international public offering worldwide so far this year. Now, a big driver of the Hong Kong Stock Exchange's performance is Chinese investors going into Hong Kong. Since the release of DeepSeek's low-cost but powerful AI model, that spurred a wave of enthusiasm for Chinese tech companies, especially from investors from the mainland. Here's economist Alicia Garcia-Herrero.
The real force behind a sustained recovery of the Hong Kong stock market, given that 80% are Chinese stock names, so is really the Chinese economy. So as long as we see that the Chinese economy is doing well and it can sustain the pressure from the US administration, but also its own weaknesses, because not everything is coming from the US, a lot, but not everything. If that resilience is there, I think the Hong Kong stock market will do well.
One of the big draws is the Hong Kong currency, which is pegged to the US dollar, and that's a plus for Chinese companies that want to expand overseas and avoid Beijing's capital controls. The trade war has also had an impact on stock markets, with Hong Kong benefiting from its position as an intermediary between China and the United States. It's seen a big rise in IPOs this year. Mainland China has been much more directly impacted by trade tensions with the US, and that's impacting business sentiment. Laura Westbrook, SABC News, Hong Kong.